Hello everyone, my name is Craig Adler. I am a retired certified financial planner. I'm also sometimes known as the angry financial planner. I am angry because we've made personal finance far too complicated. I have started this channel to address that concern. One issue that many people have is they're not exactly sure the steps necessary to create an appropriately diversified portfolio. That is going to be the focus of today's video. I'm going to be showing you how to use the Schwab Portfolio Builder to achieve that objective. Not to waste any time, let's go ahead and look at the tool.
The first step is we need to be logged into the Schwab site. And once we are logged in, we go Research, Research Tools, and Mutual Funds. And in the lower right, we can now see the Personalized Portfolio Builder. When we first arrive at the Personalized Portfolio Builder website, it's just telling us this is a tool that is designed to assist with the asset allocation process to build a diversified portfolio. From there, after we hit continue, we have three choices in front of us. The first choice is mutual funds with taxable bonds, mutual funds with municipal bonds, and exchange traded funds. The first time I saw this, I thought I actually had three different choices. What we're really doing here is we are telling the portfolio builder how do we want our solution to be presented to us. The first two choices on the left are mutual fund options. The third choice on the right is exchange traded funds. The difference between the first two is the fixed income on the second choice will have tax exempt interest. So if you are in a higher tax bracket or if you're worried about that concern, that might be an option you'd want to utilize. For today's video though, I'm going to be using the exchange traded fund option on the far right. Once we click on that and hit continue, the next thing it wants to know is my risk tolerance. And I have 5 different choices going from conservative to aggressive. So I am going to start out by saying I am moderately aggressive. And once I do that, notice it shows me my current asset allocation or my desired asset allocation should be 80% stocks and 20% bonds. And in the middle of the page, it kind of tells me how much risk I could expect or what's a worst case scenario. Notice it's telling me that in a bad year, I could lose up to 30% of my wealth. If I'm concerned about that, I can make the portfolio more conservative by making it moderate. The worst case scenario drops to 20%. And the reason that's happening is it's now 60% stocks instead of 80%. But I'm okay with the more aggressive approach. So let's go ahead and select that. The next thing it wants to know is how much money do I have to invest? So I'm going to say $100,000. After I do that, it walks me through each of the primary asset classes, starting with large cap funds, and it gives me 5 different choices. It gives me a traditional index fund, it gives me a fundamental index fund, and for those of you that are interested in investing through environmental, social, and governance issues, each asset class gives me at least one of those choices. I can click on the links to learn more about these funds, but I'm just going to go ahead and select one and move forward. I then do the same thing for small cap investments. It wants me to select a fund. Notice when I do that though, it also tells me what percentage of the portfolio should be in that asset class and tells me how many shares of that fund I should own as well. I can do the same thing for international. I kind of like broad-based, highly diversified investments. So I'm going to go with the Total International Index Fund. It tells me how many shares to buy there as well. And then finally, my last step, which fixed income product do I want to use? I'm going to go with the U.S. Total Aggregate Bond Fund. But notice if I did want a tax-exempt choice with an ETF, I do have that as my very last choice. Now, one concern I do have with this website is this. If I decide to opt out, notice it takes 100% of that money and reassigns it to cash. In my opinion, that is not an ideal solution. And the reason why is if I opt out of international, that's a stock category. I should probably reassign that to large and small cap US stocks to maintain the appropriate risk portfolio that I selected earlier. So I just wanted you to see that flaw, but the bottom line is this. I would personally not make that choice, but if you do decide to opt out of a category and you do want your asset allocation to remain the same, you're actually going to have to do that manually. The final thing I want to show you that I really like about this tool is once you've made your choices, it then will allow you to place a trade. It will ask you, do you want to do a market trade, a limit trade? Do you want your dividends reinvested? Is this good for the day or good until cancel? So I've selected that. And once I've made my choices, notice it takes me to the trading screen. Everything's already filled out. I could just change my limit price if that's something I want to do. And finally, then I could hit review orders and I could place trades based on these choices that I made. So it does an excellent job of creating a basic portfolio. It shows me how many shares to buy, and it even transfers all that data into the trading screen. I hope you found this demonstration helpful. Let me go ahead and just make some quick closing thoughts.
I hope you found this video helpful. In the comment section, do you have any questions or any concerns? Please let me know, and I will get back to those as quickly as I possibly can. I have created this channel so that everyone can have the opportunity to improve their financial literacy and help you make informed financial decisions. But I need your assistance as well. Please support the channel by subscribing. And remember, when it comes to our money, it is always better to be educated than angry.